That's the closing bell on Wall Street, and now it's market domination overtime. Let's take a look at the action from today's session where we closed. Now, a couple of things notable from today. One is that we saw a rally continuing in the major averages, and that's as there was some reporting this morning that perhaps the tariffs announced on April 2nd will not be quite as sweeping as had been anticipated, although there will still be significant tariffs announced that day. At least that's still according to the reporting. The second thing to note about today after the increase is that it was a fairly stable and steady session. In contrast with some of the action on an intraday basis that we've seen as of late, where there's been a lot of intraday volatility, a lot of wavering in range. Today, stocks went up and then kind of traded up all day. We did not see the kind of sort of volatility during the course of the day. So the Dow closing higher 1.4%, the S&P up by almost 100 points, 1.76%, and the Nasdaq leading the gains at 2.27% here. We also saw big gains in the small caps here, the Russell 2000 up 2.5%. When it comes to sectors here, the last time we checked an hour ago, utilities were very barely in the green, so they end up being the weakest link over the course of the session. The strongest group by far, the XLY, up 3.7%. Now, this is consumer discretionary. We also had tech that was strong as well. And a lot of that consumer discretionary group was pulled up by Tesla, which had its best day, at least since Election Day. Actually, this 12% gain might have surpassed the gain that it saw on Election Day. I believe that is a larger gain. So we have not seen action like this in Tesla for quite some time here, benefiting perhaps from the both positive vibes and also specifically some of the headlines and hopes on tariffs. But it wasn't just Tesla, although Tesla was far and away the best performer within the Magnificent Seven. We see the other Mag 7 stocks also rising on the day here today. But it wasn't just big tech, right? We saw this strength broadly in the Dow, even though a lot of that is in big tech. But Walmart higher 1.7%, JP Morgan up 2.7%, and Visa up 2.4%. HG, Home Depot up as well. So really it was a little more broad-based than just the large cap tech. A lot of companies whose investors have been concerned about tariffs sort of bouncing back in today's session. I'm going to take a look at one of Jared Blickery's favorite boards here. He is off today, so I'm doing it in his stead. The leaderboard, sort of what he calls the sort of sentiment leaders here. The best performer here today was GBTC. Of course, Grayscale Bitcoin Trust up 5.2%. Cathie Wood's ARK Innovation up 5.2%. IPO, don't necessarily see this one on this list a lot, up 3.7%, followed by retail and the Mag 7 and home builders. So again, showing that it's sort of broad-based here at the same time that the message is risk on was the theme of the session. Josh?
All right, Julie. Strong rally to start the week on hopes President Trump is softening his stance now on tariffs. He said at an afternoon event that tariffs on automobiles and semiconductors would be coming soon, but also suggested that many countries could be getting breaks. And the major averages closed near the highs of the day after those comments. Joining us now to help us think through all this is Sam Stovall, CFRA Research Chief Investment Strategist. Sam, great to see you as always. In your note this morning, Sam, you wrote, "We continue to see an upward trajectory to this market, though with a lowered angle of ascent." Walk us through what that means, Sam.
Well, Josh, good to talk to you again. Essentially, a lowered angle of ascent, we come up with a 12-month target because for the S&P 500, that then helps the analysts when they make their buy, hold, and sell recommendations on individual stocks. Our target was 65.85 at the beginning of the year. It is still 65.85, which implies that now we're looking at something closer to about 6,400 on the S&P 500. So still a positive gain, but likely to be in the upper single digits, mainly because we find this likely to be a pretty challenging year, even though we're enjoying a nice counter-trend rally this week.
We are, Sam. Hey, it's Julie here. It's great to see you. So what needs to happen then to, make this more than just a counter trend rally, right? To see those gains sort of take hold by the end of the year?
Right. Hey, Julie. Well, first off, I think you could say that this is a manufactured correction because basically it started with all of the tariff talks and then the worried from a cascading effect of slowing economic environment combined with sticky inflation and then a series of downward revisions to 2025 earnings estimates. All 4 quarters are now expected to show year-on-year gains that are below what the estimates were on December 31st of 2024. So I think should we find a fairly rapid conclusion to this trade war, if you will, then I think that could help boost share prices as the year progresses.
I'm curious, when you try to pencil in your expectations for corporate profit growth in 2025, how much confidence you have in that, Sam, right now? Because it seems just tough, given the range of uncertainty we're talking about here, from tariffs to taxes to regulations and on and on.
Oh, absolutely. It's very tough. And so these are, in a sense, best guesses, if you will, because right now Q1 is expected to show about a 7% gain in earnings. But at the end of December, it was expected to be up more than 11.5%. For the full year, now the estimate is a little more than 9% versus the near 13% rise initially anticipated. So all of these numbers are quite fluid, and I think we have to wait and see what happens on April 2nd, 3rd, 4th, et cetera.
So in the meantime, Sam, what should investors be doing here? I know that you were looking at some of the highly rated CFRA stocks as places maybe to go while people are, maybe can put aside what's going on a little bit. CME is one of them, and I guess, with a lot of volatility in the market, that can be good for places that, trade for a living effectively.
Sure. Well, what I was doing was looking at those groups that have performed well since the March 13th bottom, because I looked at the speed with which the market declined a little more than 10% to fall into correction territory. And looking at all declines of 10% or more going back to World War II, I found that if it was a fairly swift decline, it typically ended up being a very shallow decline that then was followed up by a fairly swift recovery to break even and beyond. So I was looking at those groups that had been beaten up, but also where we have favorable technical and fundamental forecasts. CME Group was one of those. Mainly, we like the fact that both open interest and client acquisitions have not been appreciated, in our opinion, by the investing community. And the company trades at a discount to its historic averages as well as its peers. So the financial stocks we think should do fairly well.
Are there sectors, Sam, you would avoid here?
Well, interestingly enough, Josh, what typically happens after a correction is that the worst performing sectors are the ones that tend to take the lead. Consumer discretionary was down 16% during this correction. Technology down 14%. Not surprisingly, they are the best performers on the way out. Conversely, those safe havens, consumer discretionary, healthcare, utilities, are the ones that investors rotate from in order to go into those groups that had been beaten up. So we're still indicating that we think that if we get a rotation back into growth, they're going to be leaving the defensives behind.
Sam, great to see you. Thanks so much for joining us.
My pleasure. Good to talk to you again.
Take care. The FBI has launched a task force to investigate the attacks targeting Tesla. This coming after multiple incendiary devices were found at a Tesla showroom in Austin, Texas. The incident was the latest in a series of attacks and vandalism on Tesla properties. FBI spokesman Ben Williamson confirmed the task force via X, and according to the New York Post, the Bureau has received reports of 48 instances so far this month related to Tesla vehicles, dealerships, and charging stations, and is investigating at least 7 of them in conjunction with local law enforcement. Josh, this is something that Pam Bondi, the Attorney General, has talked about, and so now the FBI taking action in this area.
Yeah, I see a post here by FBI Director Kash Patel as well on X. He says FBI has been investigating the increase in violent activity toward Tesla over the last few days. Says they've taken additional steps to crack down, coordinate our response. Says this is domestic terrorism. Those responsible will be pursued, caught, and brought to justice, he says.
Well, coming up, a look under the hood at the future of self-driving trucks with a helping hand from chip giant Nvidia. More market domination overtime on the other side. Torque is moving one step closer to commercializing self-driving trucks. Nvidia has helped on that journey to develop a scalable physical AI compute system for autonomous trucks. However, it's a long and winding road ahead. Torque Robotics CEO Peter von Schmidt is joining us now to discuss. Peter, this was something that Nvidia talked about last week at its GTC conference. Working with you guys was one of the partnerships that it announced. So explain to us how the partnership works and how it's going to help you all to get those self-driving truck platforms on the road.
Thanks for having me here. When you think about commercializing self-driving trucks, which is still a little bit out, so we are talking here about a year 27 where we think it can scale, and you assume for a magic second the technology is solved, it's all about really how to commercialize and productize it. And in trucking, that means it needs to be safe, reliable, and cost-effective. And the most important component in this, of course, is the compute. And that's why the partnership with Nvidia and Flex is so important for us. That's basically the brain where our AI, end-to-end AI algorithms are running. And you see, by the way, here a video of our first driver out. That was amazing back in September. But this is the core component to really have automotive-grade components that are designed into price points. Because a truck is a tool, so you really need to hit price points in terms of unit costs and running costs. And this is where this partnership is so important for us. And NVIDIA is just the best in terms of chipsets for our applications.
Peter, just a broader question, for folks who don't follow this sector and this technology as closely, when you're explaining the potential benefits, Peter, of driverless trucks over traditional trucks, how would you describe that? Is this about trucker pay? Is it about they can travel a longer length of time? Are they possibly, at the end of the day, going to be safer? How do you explain it to friends and family?
Yeah, it's really all of the above, and we firmly believe that autonomous trucking is the future and will solve the major pain points that we see in supply chains today. It all starts with safety. Autonomous trucks will be safer than humans because they just consistently 24/7 drive like the best driver on its best day, after the best sleep, after the best cup of coffee. It's just a super consistent performance that these trucks deliver. Those trucks can run 24/7 more or less, so you don't have the restrictions of hours of service. You could even rethink supply chains completely differently. Goods will arrive faster and safer. And in the end, at lower cost, which is really important for all of us because it will help to dampen inflation and goods in the grocery stores. And so over 70% of all goods are moved on trucks will become cheaper. And I think that there's a huge potential. It also addresses driver shortage. The driver shortage we mainly see in this overhaul long haulage segment, which are the really, really long stretches where fleets see almost 100% turnover in the year, because most drivers want to drive more regional. So it will also help with labor shortage and giving us a more resilient supply chain.
Peter, all of this said, it makes logical sense. I wonder how far we are away from that vision realistically. When do you first expect, sort of critical mass of your vehicles on the road? And I'm also curious, given that you guys are owned by Daimler, where you think we will first see that critical mass? Would it be in the United States or in Europe, for example?
The United States is clearly leading in this technology. I think it's a race between United States and China. So we definitely think this technology will come first here in US. And within US, in the Sun Belt, which is roughly I-40 and everything south of it. I'm currently in Texas, in Dallas-Fort Worth. You could call it the freight capital of the world, at least, maybe besides Chicago. That's where the technology will start. Really at scale, that you see a large scale impact. We might talk more like next decade, but the technology will start 27 in a scalable fashion. So you order one truck, you get one. You want to operate 100 trucks, you could operate 100 trucks. Those trucks will be what we call production intent. They will be produced in factories with automotive grade hardware installed by Daimler and run on the Torque software in the customer networks.
You know, Peter, you operate in a competitive market. Obviously, others are pursuing the same technology, the same goals. What are your competitive advantages?
First of all, we are happy on everyone who succeeds with this technology, because I think in the end, it's good for the market overall, and it's great technology that should come to the fruition. I think our core benefit is really that we have an integrated solution from the rubber to the roof, so that we can have a production intent scalable solution that comes out of factories. And coming out of factories instead of being retrofitted and one-offs and prototypes is so important for safety, for quality, for reliability, and in the end for cost points, because you need to design your product into certain unit costs and running costs, and nothing can beat an assembly line. And I think that's a unique advantage that we have as Torque Robotics as part of the bigger Daimler Truck family.
Peter, thanks so much for joining us today. Appreciate your time.
Thank you.
Well, Elon Musk's DOGE is set its sights on an ambitious goal of cutting back federal spending, but budget cuts to the IRS may be doing more harm than good. Here with more is Yahoo Finance's senior columnist, Rick Newman. Rick.
Hey guys, so reports are that the DOGE Commission has cut something like 7,000 IRS workers so far, and it could be aiming for as many as 50,000 workers. That would be half of the agency's entire workforce at the start of this year. And this is completely counterproductive for anybody who claims to care about tackling the national debt and trying to lower the annual deficit. When you cut government workers at the IRS, you make it harder for them to enforce the tax laws. It's harder for them to go after tax cheats. And we already have about $700 billion per year in taxes that Americans owe, but the IRS cannot collect. That's known as the tax gap. The IRS is never going to get all of that, but it should be aiming for more of that. That's revenue that taxpayers, and it's usually wealthy taxpayers, owe to the government, but they're simply not paying because the IRS can't enforce all the laws. If you could just get more of that revenue, you'd raise government revenue. You wouldn't have to have a tax hike. You wouldn't have to change tax rates. Congress wouldn't have to pass any legislation. You would just get more revenue from people who owe it. But when you cut IRS staffing, and we've been through this before, though not as dramatically as it's happening right now, by definition, the IRS is just going to collect tax revenue. And it's a given that the amount that the government would save from lower personnel costs at the IRS would be, maybe only 10% of what it's going to give up in foregone revenue. So this is a bad idea, but it's happening anyway.
And Rick, when you talk about that huge tax gap, which is just a mind-boggling number, is collecting that historically just a matter of having more bodies who can go after those folks who owe?
Well, I think it changes over time depending on how many loopholes there are in the tax code. But technology is a big part of this. I mean, there are still computer systems at the IRS that date to the 1960s and the 1970s, just because they have never been able to completely modernize. And, they're using that technology up against tax lawyers and accountants who have the best of everything, when they're representing multimillionaires and billionaires. It's worth it for tax firms and accounting firms. They're going to have artificial intelligence. They're going to have systems, algos that tell them how to outsmart the IRS, or just tie it up forever and hope that the IRS just loses interest. One of the reasons this happens is that wealthier people don't earn most of their money from a paycheck paid by a company. I mean, when you're a regular worker and you just get paid through a paycheck, your employer takes out your taxes, and there's you really can't cheat. It's pretty hard to cheat unless you're in a cash business. But when you make your money from investments, business revenue, overseas transactions, asset sales, art is a classic one. What's a painting worth? It's just very hard to nail down the taxes that are owed. So this is just something that's going to mean that the aristocrats, the oligarchs, the United States, is going to benefit them. They're going to pay less. And the rest of us are going to keep having our taxes taken out of our paycheck.
Rick, thank you. Appreciate it.
Bye, guys.
Time now for what to watch Tuesday, March 25th. We'll start off on the economy. Consumer confidence data for March is coming out in the morning. Economists forecasting confidence to fall to 93.6 amid continuing economic uncertainty. The new data giving us more insight into the health of the consumer.
Moving over to housing, monthly new home sales data for February coming out in the morning. Economists anticipate sales will increase to 680,000. This comes after a busy week of housing data last week, with housing starts surprising to the upside last month, but home builder sentiment falling to its lowest level since August.
And taking a look at earnings, we're going to be getting some reporting tomorrow from McCormick, GameStop, and Rumble tomorrow. McCormick announcing results for the first quarter before the opening bell. Analysts expecting the company to post strong volume growth despite negative industry trends in the packaged goods space. But weak demand in China is also expected to persist in the first half of 2025.
That'll do it for today's Market Domination Overtime. Be sure to come back tomorrow at 3 p.m. Eastern for all of your coverage leading up to and after the closing bell.
But don't go anywhere. On the other side of the break, it's Asking for a Trend. I've got you covered for the next half hour with the latest and greatest market-moving stories so you can get ahead of the themes affecting your money. Stay tuned.